Welcome to Simple Investing Secrets, your trusted source for valuable investment insights, stock recommendations, and strategies to help you achieve financial freedom. In today's video, we'll delve into the top 5 dividend-paying ETFs to consider for 2024. So before we start, if you find value in this video, please support our channel by liking and subscribing to our weekly updates. Now, let's get started. ETFs, or exchange-traded funds, offer investors a lucrative opportunity to earn income through dividends. These dividends are paid to the ETF issuer and subsequently distributed to investors based on their share ownership. If you're seeking a reliable income stream, consider exploring ETFs that specialize in investments historically known for their high dividend payouts. These ETFs provide a steady flow of income, offering stability and growth potential to your investment portfolio. But how exactly do ETF dividend payments work in terms of timing? Similar to stocks, ETFs have specific dates set by their sponsors for dividend distributions. These include the ex-dividend date, record date, and payment date, which determine who receives the dividend and when it's paid out. For instance, the ex-dividend date for well-known ETFs like the Spyder SP 500 ETF (SPI) occurs on the third Friday of the final month of a fiscal quarter. This date is crucial for investors as it signifies eligibility for receiving dividends. ETFs may opt to pay dividends in cash or reinvest them back into the fund. The choice is outlined in the fund's prospectus, providing transparency to investors regarding dividend distribution policies. When dividends are paid in cash, ETFs like the Spyder SP 500 ETF allocate dividends from their underlying stock holdings into a designated account until payout time. These dividends are then distributed proportionally to investors, providing them with a tangible income stream. Alternatively, some ETFs reinvest dividends into the fund, enhancing its performance by leveraging the additional capital during market fluctuations. While this strategy offers potential benefits, it's essential to note that dividends received, whether in cash or reinvested, are taxable to investors in the year they're received. Despite tax implications, dividend-producing ETFs remain an attractive option for investors seeking reliable income streams. Notably, ETFs provide flexibility in controlling income tax exposure compared to traditional mutual funds. Now let's explore 5 popular dividend-oriented ETFs that offer diversified exposure to high-yield dividend-paying companies. First on our list is the Spyder SP Dividend ETF. The Spyder SP Dividend ETF distinguishes itself as one of the most extreme and exclusive dividend-focused ETFs available to investors. It tracks the S&P High Yield Dividend Aristocrats Index, which comprises companies from the S&P Composite 1500 that have demonstrated an exceptional commitment to shareholders by increasing their dividends for at least 20 consecutive years. The stringent selection criteria for inclusion in the S&P High Yield Dividend Aristocrats Index ensure that only a select group of companies with an exemplary track record of dividend growth make the cut. These companies have weathered various market cycles and economic conditions, demonstrating resilience and consistency in their dividend payouts. As a result, they are often perceived as less risky investments, particularly for investors seeking total return. The focus on companies with long histories of reliably paying dividends aligns with the preferences of investors seeking stability and income from their investments. These companies tend to have established business models, strong cash flows, and disciplined capital allocation policies, which contribute to their reputation for stability and reliability. Investing in the Spyder SP Dividend ETF provides investors with exposure to a diversified portfolio of high-quality dividend-paying companies across different sectors and industries. This diversification helps spread risk and may reduce the impact of individual company performance on the overall portfolio. Overall, the Spyder SP Dividend ETF offers investors an exclusive opportunity to gain exposure to a select group of companies with a proven track record of dividend growth and stability. By focusing on these high-yield dividend aristocrats, it aims to provide investors with a combination of income, stability, and the potential for long-term total return. Number 2. The Vanguard Dividend Appreciation ETF. The Vanguard Dividend Appreciation ETF offers investors exposure to a portfolio of companies renowned for their consistent dividend growth by tracking the S&P US Dividend Growers Index. This index consists of companies that have demonstrated a commitment to increasing their dividends for at least 10 consecutive years, reflecting a strong track record of financial stability and shareholder-friendly policies. Its investment strategy focuses on domestic assets, providing investors with exposure to established U.S. companies known for their dividend-paying prowess. The portfolio includes well-known names such as Microsoft Corporation, MSFT, and Johnson & Johnson, J&J, which are recognized for their history of distributing rich dividends to shareholders. By investing in Vanguard Dividend Appreciation ETF, investors gain access to a diversified portfolio of companies that have consistently rewarded shareholders with growing dividends over time. This emphasis on dividend growth aligns with the objectives of income-oriented investors seeking reliable returns and long-term capital appreciation. Furthermore, its market capitalization-weighted approach ensures that larger companies have a greater impact on the ETF's performance, potentially enhancing stability and reducing volatility. This approach may also align with the preferences of investors seeking exposure to established blue-chip companies with strong fundamentals. Overall, the Vanguard Dividend Appreciation ETF offers investors a compelling opportunity to gain exposure to a diversified portfolio of U.S. companies with a proven track record of dividend growth. Through its focus on domestic assets and well-established dividend-paying companies, it aims to provide investors with the potential for both income and long-term capital appreciation. Number 3. The iShares Select Dividend ETF. The iShares Select Dividend ETF is a prominent ETF that tracks a dividend-weighted index, making it the largest ETF with this investment strategy. While similar to Vanguard Dividend Appreciation ETF in its focus on U.S. companies, iShares Select Dividend ETF sets itself apart by targeting smaller companies within the market. iShares Select Dividend ETF investment strategy emphasizes smaller U.S. companies that have a strong history of dividend payments, providing investors with exposure to potential growth opportunities in this segment of the market. This focus on smaller companies may appeal to investors seeking higher growth potential, as smaller companies often have greater room for expansion and may be more agile in adapting to market changes. Approximately 1/4 of its portfolio consists of utility companies, reflecting the traditionally stable and income-generating nature of this sector. Utility companies are known for their reliable cash flows and dividend payments, making them attractive investments for income-oriented investors. In addition to utilities, iShares Select Dividend ETF Portfolio encompasses other major sectors, including financials, consumer staples, energy, and communication stocks. This sector diversification helps mitigate concentration risk and provides investors with exposure to a wide range of industries and businesses. By investing in iShares Select Dividend ETF, investors gain access to a diversified portfolio of U.S. companies with a focus on dividend payments, particularly from smaller companies. This emphasis on dividends aligns with the preferences of income-oriented investors seeking regular income streams from their investments. Overall, the iShares Select Dividend ETF offers investors a unique opportunity to gain exposure to smaller U.S. companies with a strong history of dividend payments, while also providing diversification across various sectors within the market. Number 4. The iShares Core High Dividend ETF. BlackRock's iShares Core High Dividend ETF offers investors exposure to a focused portfolio of U.S. stocks selected for their high dividend yield potential and strong fundamentals. While younger and smaller in terms of portfolio size compared to the iShares Select Dividend ETF, it stands out for its strategic approach to dividend investing. iShares Core High Dividend ETF tracks a Morningstar-constructed index comprising 75 U.S. stocks that undergo rigorous screening based on criteria such as dividend sustainability and earnings potential. These criteria are central to the fundamental analysis principles espoused by legendary investors Benjamin Graham and Warren Buffett. The emphasis on dividend sustainability reflects a commitment to selecting companies with the financial strength and stability to maintain or grow their dividend payments over time. This aligns with the objectives of income-oriented investors seeking reliable income streams from their investments. Moreover, iShares Core High Dividend ETF's focus on earnings potential underscores its dedication to identifying companies with strong growth prospects. By targeting companies with robust earnings potential, it aims to provide investors with the opportunity for both dividend income and capital appreciation over the long term. Morningstar's sustainability ratings, which guide the selection process for its underlying index, are influenced by Warren Buffett's concept of an economic moat. This concept refers to the competitive advantages that some businesses possess, allowing them to maintain profitability and fend off competition over time. By investing in companies with economic moats, iShares Core High Dividend ETF seeks to capitalize on their ability to generate sustainable returns and protect shareholder value. Overall, BlackRock's iShares Core High Dividend ETF offers investors a focused and strategic approach to high-yield dividend investing, leveraging fundamental analysis principles inspired by Benjamin Graham and Warren Buffett. Through its emphasis on dividend sustainability, earnings potential, and economic moat, it aims to provide investors with a compelling opportunity for income and growth in their investment portfolios. Number 5. The Vanguard High Dividend Yield ETF. The Vanguard High Dividend Yield ETF stands out as a low-cost and straightforward investment option, consistent with Vanguard's reputation for providing accessible and efficient investment vehicles. It tracks the FTSE High Dividend Yield Index, effectively capturing the performance of companies with high dividend yields. One of Vanguard High Dividend Yield ETF's notable strengths is its outstanding tradability, making it appealing to investors across various demographics. Vanguard's commitment to providing liquidity and minimizing trading costs ensures that investors can buy and sell shares of Vanguard High Dividend Yield ETF with ease, enhancing its attractiveness as a core portfolio holding. A unique aspect of Vanguard High Dividend Yield ETF investment strategy is its focus on companies that pay very high dividends. This emphasis on high dividend yield stocks aligns with the preferences of income-oriented investors seeking reliable income streams from their investments. As a result of this investment focus, its portfolio is weighted heavily towards sectors known for their dividend-paying prowess, particularly financials and consumer staples. Financial companies often have stable cash flows and a tradition of distributing dividends, while consumer staples companies tend to offer products and services that are in demand regardless of economic conditions, providing a reliable revenue stream. By concentrating on sectors with a strong dividend-paying tradition, it provides investors with exposure to companies that prioritize returning value to shareholders through dividend payments. This focus on income generation may appeal to investors seeking both income and potential long-term capital appreciation. Overall, the Vanguard High Dividend Yield ETF offers investors a cost-effective and straightforward approach to accessing high dividend yield stocks. Through its focus on sectors with a history of high dividend payouts, it provides investors with an opportunity to generate reliable income while maintaining broad market exposure. In addition to these ETFs, investors can explore alternative income-oriented ETFs, such as those focusing on preferred stocks or real estate investment trusts, REITs. These ETFs offer unique opportunities to diversify income sources and optimize portfolio returns. As we conclude this video, remember dividend-focused ETFs offer investors a convenient and efficient way to access a diversified portfolio of high-yield dividend-paying companies, providing a reliable income stream and the potential for long-term growth. Whether you're seeking stability, income, or a combination of both, the diverse range of dividend-oriented ETFs available in the market caters to various investment objectives and risk profiles. By understanding the dividend distribution process and selecting ETFs aligned with your investment goals, you can harness the power of dividends to build and enhance your investment portfolio over time. So, explore the world of dividend-focused ETFs and unlock the potential for steady income and wealth accumulation in your investment journey. Don't forget to like and subscribe to this video for more investing content. Thank you for joining us at Simple Investing Secrets, where we strive to empower you with valuable insights on your path to financial freedom.